To cut or not to cut? That is the question for the Fed after today's CPI report came in mostly in line with expectations. Joining me now here at Post 9 to discuss is former Dallas Fed President Richard Fisher. Welcome. It's great to have you here in person.
It's an honor to be here. Thank you, Scott.
You say you are baffled at the market's reaction to the CPI.
Right.
Why?
Well, as you know, they're just about 99% now of a likely cut of a quarter. The economy's doing well. Powell keeps talking about this.
Said it was remarkable.
Financial conditions
recently
are wonderful. Look at what happened here on the floor today. Spreads are narrow. I think one of the ironies, by the way, Scott, is they cut 50 basis points in September and then another 25. Rates have gone up. Not just from 1 year out. They went up on the 6 month and they went up on the 3 month. So financial conditions are very accommodative right now. A lot of private capital out there, private lending and so on. If I were at the table, I would say let's pause, but I'm not at the table.
Well, you wouldn't.
I'm an old guy, so I'm not there anymore.
So you wouldn't cut next week?
No, I wouldn't.
And what would you do after that?
Well, I'd wait and see what the data tells me. They're having trouble getting the 2%. We just saw the inflation numbers. They bipped up just a little bit. The employment numbers are quite strong. I don't see a reason to do it, but there may be a reason, and so I'm saying, I was saying 40% probability, but obviously the market differs with my views, and the market's more powerful than I am.
Well, the reason is because it's such a delicate balance of acknowledging that the economy is, in the Fed chair's words, remarkable,
right,
while not wanting to upset the labor market. He talks about the risks on two sides. So how do you thread that needle?
He also talks about these are historically strong employment numbers. And the data that just came out wasn't that weak. So we'll just have to see. Remember, it's 19 people. It's their best judgment. That decision, in my view, given the way the memos circulate, has already been decided or will be decided by Friday. And we'll just have to see what they do.
I mean, you think they're at neutral now or close? How would you assess that?
And they don't know what neutral is.
That's why I asked you the question.
Yeah, obviously, we're thinking about the rate, which doesn't overdo the economy, underdo the economy,
That's right,
and contains inflation. So I don't know. I think they're not there yet. And I think they have to be careful. We are seeing some inflationary pressure still in the services sector. And remember, only 17% of the U.S. economy is manufacturing. Mm-hmm. Goods have been depreciating for the longest time. It's the service sector that counts. And those numbers are still fairly robust in the 4% range.
You said we're not there yet.
Right.
Obviously implying that we're still restrictive. So if we're still restrictive...
No, I'm not saying that. I'm just saying we're not there yet.
Well, if we're not at neutral yet, where are we?
Well, I don't think we have to be at neutral if inflation is still a threat. And we still have this volatile inflationary pressure above the 3%, 2.5, 2.6%, 2.7% level. And if you take the real core, it's around 3%. So we haven't gotten there yet. And that would tell me just maintain conditions for now. But again, Scott, I'm not on the committee anymore. I'm an old guy.
No, but you have strong opinions, which is why we like to have you on.